Listen, if you file your 2026 taxes without having access to these checklists, you're almost guaranteed to delay your tax refund, trigger some type of IRS correspondence, or maybe even have a delay to the point where you leave money on the table. And we don't want to do that here. And if at any point in this video, if I share something with you that can potentially put more money back into your pocket, just drop the money bag emoji down in the comments, because that's what I like to do. And I like to front load these videos because I know attention spans are shorter and shorter. So I want to make sure you get what you came for, get a ton of value, but at the same time, I put money in your pocket, because when it comes to the taxes, taxes are one of those things that they say you must do. Well, if you can legally pay less, then that means you put more money back into your pocket. And there are strategies that allow you to do that no matter what level you're on. So I'm all about understanding that, okay, most people are going to pay $1 million in taxes over the lifespan, depending on how much money they're making. However, if you can figure out a way to legally, ethically, and morally not pay near as much in taxes, then that puts that money back into your household so you can build well. So that being said, let's talk about the 2026 tax season checklist. Every taxpayer situation is different depending on how they earn taxable income. So here's a list of the most common forms to watch for. Now, this is what you got to understand. When it comes to your taxes and it comes to you getting a larger refund, it's based on what you already did in 2025. Not anything new, not your tax preparer doing something magical to your tax refund or your tax filing. It's about what you did in 2025. So if you can take a step back and say, okay, what did I do in January? What was happening at that time? February, what was happening at that time? March, April. And this means sometimes going directly through your expenses. Where were you spending money? Were you out of town? Were you in town? What were the things that you were doing during that time? And then it'll start to jog your memory. If you haven't been keeping records throughout the year, to start to jog your memory of what you did. And you'll realize, oh, I did this. I spent money here. And then you ask yourself, did this tie into any tax deductible event? What do I mean? Many of you are doing things right now that fall into the category of a home-based business, or what I like to call a phone-based business, because in this day and age, now you can make money from the comforts of your home, but also from the comforts of your phone. So if you are doing something that can position you to make money, now understanding that side money also equals side tax deductions. So if you're doing things online like posting content because you want social media to pay you for your content, whether you're on YouTube, whether you're on Facebook, whether you're on TikTok, whether you're doing some type of TikTok shop, you're trying to make some extra money online using social media, you are indeed operating as a home-based business with the intent to make a profit. That's what the IRS wants to know. Do you operate this with the intent to make a profit? Who's not trying to be profitable? Who's not trying to post online or do certain things to make money? Most people are. And if you are, then I want you to take a step back and look back in January, February, March, all the way through December, and determine what about what I was doing was something that could trigger a tax deduction. Was I recording content? If so, those things can be tax deductible. Even when you went out of town, certain travel expenses up to 100% can be tax deductible. If your content is centered around food, a lot of the meals that you record are tax deductible. And this is what I really want you to note. If they're not, going forward, how can you make it so that the things that you're doing anyway become tax deductible events? You see where I'm going? See, this is not lying or denying anything. This is positioning you to understand that the things that you do on a day-to-day position you so that you live a life where everything is content. Not saying you record your behind the scenes and things you don't want, air it out. That's not what I'm talking about. But it's things that you do on a day-to-day that could position the miles that you drive to be tax deductible, the places that you go to be tax deductible, the things that you buy to be tax deductible to some degree, the food, the restaurants that you attend to be tax deductible, of course your phone bill, of course your internet bill, of course certain things. And then when you really get savvy and understand it, you realize, oh, I have kids. I can also pay to assist me in these areas of marketing my business, social media. And then for those of you who are in the gig economy, the world opens up to you as well. And these are just a few things: e-commerce, etc. If you're buying things to sell them for a higher cost, some people do garage sales, things of that nature. All of these are ways for you to make extra money, but they lead to tax deductions. A job alone won't do it in terms of tax deduction. So I'm not saying that you're going to work, that don't count as a job. But if it's 1099, it also could position you to have tax deductions. I ought to see some money bags in the comments, because I promise you that puts some money in the pockets of many. So let's talk about these different checklists. So tax season will officially kick off on January 26th, depending on when you're watching this. That time may have already come, and taxpayers will soon be flooded with tax forms from their employers, banks, brokers, and others. Last year, IRS processed more than 163 million tax returns. So who knows what it's going to be this year, which means getting filed fast and flawlessly could help avoid potential IRS processing dates. And that's what this video is about, giving you a checklist. So before filing your federal state tax returns in Illinois, the CPA basically suggests making a checklist, but that's for anybody. That's applicable. Every taxpayer situation is different depending on how you earn income. But one of the forms is the W-2. If you work a job, the W-2 is provided by employers annually to report employees' total compensation, taxes paid, contributions to retirement accounts, among other payroll deductions and details. Now, you also got to understand that sometimes the retirement account that you pay into can be tax deductible as well. A lot of people miss that. Sometimes they don't realize that they had an account that was a tax deductible account, tax deferred account. So you got to get with your tax professional to understand which one best fits you. And if you are a tax preparer, tax professional, then, it's some things that you want to make sure you understand so you can position your clients as well and educate them in a way that positions them to get more money back without you having to pull a rabbit out of the hat or perform some magic. But W-2 should be delivered by the end of January. The next form you want to consider or make sure you put on your checklist is your 1098, which is the mortgage interest statement if you have a home, provided by each lender for each mortgage a taxpayer is named on, reporting how much was paid in interest, insurance premiums, and other financial details. So you want to plug that in. A 1098E, this form reports federal student loan interest paid by borrowers equal to or greater than $600. So get all of your forms, all of your documents, because this could put more money back into your pocket. 1098T. This is where taxpayers who receive payments for qualified tuition, expenses, certain adjustments, scholarships, or grants will receive a 1098 tuition form, a T form, basically for their educational institution. Then 1099B. This is where taxpayers with proceeds from broker or barter transactions, like selling stocks, options, exchanging property, will receive a 1099B for each applicable financial institution to report any capital gains or losses. So keep that in mind. Sometimes when you take money out, you took the money out, but it was a loss. And sometimes people don't write those off. I remember when I pulled money out before and I didn't take advantage of the loss, even though it was one at the time. So just keep that in mind. And that's very helpful to know. So that way, okay, I might have been penalized depending on what it was, but I also took a loss. So that loss can be tax deductible. 1099 DIV. This is dealing with dividends. So each bank and financial institution in which a taxpayer receives dividends or other distributions from their investment during the calendar year will issue out a Form 1099 DIV to report the income. And the reason why you want to make sure you go through all of these, because what I mean when I say it can trigger some type of IRS correspondence, this is what you got to understand. If they're sending you this document, but that document does not get filed on your report, the IRS received it, and IRS knows you received it, but you didn't report it. So it imbalances when they look at the balance, because that's what how pretty much filing your tax refund or filing your taxes really is. Checks and balances. Who reported getting paid? Who reported some type of tax deduction or a form to go along with it? So if they reported it and you didn't, then it can trigger something. So this is why you want to make sure you go through each and everything and don't just rush filing taxes because pressure is being applied or your tax preparer is trying to get you to do it. Make sure you have all of your stuff together so you can better position yourself to make sure you're filing everything. And this is beneficial to the tax preparer as well. They also have a 1099 INT. This is an interest form above $10, which will be reported on the form 1099 INT for each interest-bearing account from each applicable bank or financial institution. So if you have a savings account, then you'll get issued that. And sometimes it might be pennies, sometimes it might be dollars, or if you got a high yield savings account, then it's a good chance that you can receive this form as well. Then the 1099K, this is income received for sales through payment networks like Cash App, eBay, Etsy, PayPal, Venmo. See, sometimes people think that this is money under the table. No, report that. I report all of mine, and I'll tell you the benefits of that as well. But it basically says, among others, are reported on this form. Taxpayers with these types of transactions can expect to receive a 1099K from the third parties where their transaction exceeded $200,000 or 200 transactions in 2025. Now, they were trying to lower that amount to $600. That got adjusted because, a lot of people have transactions that match that. So they would have been sending out a lot of 1099Ks. So they pulled back on that because they just wanted to know who's receiving any dime. However, they're saying anything exceeding 20,000. But even if you didn't have deposits that exceeded 20,000, I strongly suggest that you record that income. Why? Because in recording that income, some of these platforms have fees associated with it. If your Cash App is set up like a business, guess what? It's fees associated with it. So every $5 or whatever amount that they're taking from you, you get to write that off as a tax deduction because that's a operating cost. That's an expense for you. So they took it, you write it off as a tax deduction because it cut into your profits. And then the same with PayPal. All of those fees, I tally up if I get anything PayPal related, or when I get things PayPal related, I tally up the income, put it in the system. But I also tally up the expenses or the fees and write that off as a tax deduction. So keep that in mind. Not financial advice, but just something to keep in mind. 1099 miscellaneous. This is income earned from miscellaneous sources like royalties, rents, prizes, awards, or non-employee compensation. They're reported on the 1099 miscellaneous. A lot of different companies pay like this. Sometimes network marketing companies pay like this. Affiliate income pays like this. So just keep that in mind. 1099 NEC. This is independent contractors earning more than $600 during the calendar year from work. An entity will receive a 1099 NEC. So non-employee compensation basically is what that stands for their work. Then you got the 1099R. Taxpayers who receive distributions of $10 or more from a pension, annuity, retirement account, profit sharing plan, or insurance contract will receive a Form 1099R from each applicable financial institution to report the income. Then you got the Schedule K1. This is 3 groups of taxpayers typically receive the K1: business owner, co-owners, partners, shareholders, investors, and those receiving income or assets from a trust or an estate. These people will fill out the 1099K. So if you know that's you, take advantage of it. And it's also some details that go along with it. And these are usually often issued closer to March 15th. So they don't come as soon. But, if you know that this is something that you've received, then keep that in mind because you might have to file a little later if you want to make sure you include that into your tax filing. Then we got the SSA 1099 or SSA 1042S for taxpayers receiving Social Security benefits. So that would apply to you. And a simple checklist of the forms you expect to receive can help ensure that they're all accounted for before filing your federal and state tax returns. Most tax forms will be delivered from January through February. Some may take a little longer, but just knowing that positions you to position yourself and have all of your documents in order, but not only have your documents in order and minimize delays, any IRS correspondence, but also put more money back into your pocket. Because most of these things, even though it may be considered as income, may have come with some level of fees or things tied into tax deductions. And tax deductions, receipts equal cash is what I like to say. So the money that you spent circulating or whatever you did, think back, can I recoup some of that money? And if you're operating in the intent to make a profit in some business endeavor or side hustle, you can get tax deductions even as being self-employed. Sometimes people think it's only LLC. Listen, from birth, we've been a business. When we got the Social Security number, we've been a sole proprietor. So that being said, you can operate as a business because as an individual entity, you really are. So you don't have to have those things in place if you're just doing things to position yourself to get a profit. Now, there are pros and cons and benefits to scaling up the different business structure types, but I don't want that to hinder you. Well, I don't have an LLC. Well, you got a Social Security number, don't you? Or a tax ID number that you got for free from the IRS, don't you? Okay. Well, did you do any business related activity that generated income? Okay. Was it something that you were doing with the intent to make a profit? Okay. Well, look into that, and there could be some tax deductions that you deserve and that already qualify for based on that. And make sure your tax professional understands tax deductions, and make sure there's somebody who understands taking them for themselves as well. Because if they're not taking them for themselves, then they don't thoroughly understand tax deductions. Otherwise, they would be taking them because it automatically puts more money back into their pocket, as it will put more money back into your pocket as well. I may have some links down below that can benefit you in some way, shape, form, or fashion. Hopefully you got value from this. Drop a money bag in the chat if it puts some money in your pocket just off of the things that were gone over. But more importantly, stay tuned because I got more tax education and news that can benefit you and those you're connected to. Mr. Smith signing out. Salute.